Hello, welcome to my channel today. This is a King's Tutor. If you're joining us for the first time, thank you for clicking to this. Ensure you like, comment, share, and subscribe. Now, today we want to continue on our series on trading profit or loss accounts. Okay, we have seen the full video on that. If you have not seen that, I'll drop it up so you can watch that. Now, let's solve this question. Question said, following trial balance was extracted from the books of Alajobi Enterprises for the year ended 30th June 2007. We have capital 120,000, stock at the first 18,200, purchases and sales 178,000, 280,000. Returns we have 3417, discount we have 1320, 1560. Debtors and creditors we have 32,000, 24,600. Carriage outward we have 4,250. Rent and rate we have 7,480. Wages and salary we have 17,740. Machinery at cost we have 150,000. Provision for depreciation machinery is 30,000. Provision for bad debt is 7,200. Bad debt is 1,060. General office expenses is 3,890. And cash at bank is 47,720. Everything sum up to be 465.60 naira. Now the additional information states stock as at 30th of June 2007 was valued at 16,700 naira. The proprietor had withdrawn goods worth 5,600. This has not been reflected in the books. C. Wages of 2,260 is owed, while rent of 1,400 had been prepaid. D. Provision for bad debt is to be reduced to 6,000. E. Provision for depreciation of machinery at 20% reducing balance. You are required to prepare I. Trading profit or loss account for the year ended 30th June 2007 and II. A balance sheet as at that date. Okay? Balance sheet as at that date. So let's prepare this question. Now, while preparing the trading profit or loss account, I've always advised it is important we prepare adjustment. Okay, the adjustment, that is those items that will be recorded as items in the additional information. Now we are going to show where it will appear and how many times it will appear. Okay, so the first item in the additional information is stock. Okay, so in the adjustment, now we have our stock. Okay, so the stock, the first stock will go to the trading account and also go to the balance sheet. Okay, and the amount is 16,700. That's the two places it will go. That's the first one, stock. Now B, we said the proprietor had withdrawn goods worth 5,600. This has not been reflected in the books. So this is goods withdrawn. Okay, let's see how we adjust it. So if we say goods withdrawn, okay, so it will also appear in the trading account, and also go to the balance sheet. Now let's check if there's drawings there. There's no other drawings. Okay, so the same amount will go to both the trading account and the balance sheet. Okay, remember everything that appears under the additional information will appear twice. Okay, so that's why we are preparing the adjustment first. So the third one is, it said wages of 2,260 is owed, while rent of 1,400 had been prepaid. So wages of 2,600 is owed, while rent of 1,400 had been prepaid. So we did accrued and prepaid expenses. Please, if you have not seen that video, ensure you watch it up here or in my description. You will see that. So if we have wages here, they said the wages of 2,260 is owed. Owing, it means that it is what accrued. Okay, it means it is what accrued. So accrued is always added to the existing what to the existing expenses or income. So we're going to say amount paid, wages, amount paid is 17,740. So we have 17,740. Okay, and they said 2,260 is old, so we say add old 2,260. So if we add it together, it should give us 0,0,0,0,2. So this is 20,000. Okay, so this is the amount that will go to balance sheet, and it will be under current liability. And this is the amount that will go to the profit or loss account as what? Expenses. Okay, so these are where these items will occur. Then the third one, this other one, they say rent of 1/4 have been prepaid. So still under there, we said rent. Remember, prepaid, we are going to less. Rent, we said amount paid. Check in the trial balance, look at rent, okay? And the amount there is 7,480. So we'll say 7,480. Then we'll say less prepaid, because they said it's prepaid, okay, of 1/4. So we have 1,400. Okay, so this we have 0, 8, we have 0, and we have 6. So now this amount will go to the balance sheet also as current asset, and this amount will go to the profit or loss account as expenses. Okay, so that is the rent. The next one will go to provision for bad debt is to be reduced to 6,000. Now they say we should reduce provision for bad debts to what? 6,000. Now they've already given us a way in which we should reduce it. So what do we do in this regard? Okay, so in this now we have to check in the question if there is provision for bad debt there. Okay, if there's provision for bad debt there. So if we check here, we have provision for bad debt, okay, as 7.2, but they said it should be reduced to 6,000. So if we have for provision for bad debt, okay, so if we have now in terms of provision for bad debt, what we post is we get the difference. Now this is a new provision. They say they are reducing to 6,000. That's a new provision, but this one we already have this one as the old provision. So we are going to say the old provision is how much? The old provision is 7,200. Look at it. Why the new one? They say we should reduce it to, not by. Okay, so if we said the new provision is what? 6,000. So 7,200 minus 6,000 to give us 1,200. So this is the amount that goes to the profit or loss. Now, since it is reduction, remember provision of bad debt, decrease in provision of bad debt is an income. Okay, so this is the old provision, this is a new one. It means the previous one, old one, was 7.2, while the new provision has reduced to 6,000. So it is difference we post to the profit or loss account. I will post it as what? As income, because it is what? A reduction. Why this amount is what goes to the what? Balance sheet under the current assets that will be used to reduce the debtors figure. Okay, so that is the provision for bad debt. E, or the fifth one, we said provision for depreciation of machinery at 20% reducing balance. Okay, now they did not say straight line method. They said what? Reducing balance. So in this situation now, what do we do? Now we check if there's an existing provision for depreciation, 30,000. Okay, and this is machinery at cost 150,000. So we are going to do it. They said on reducing balance. Okay, so the first thing we are going to do, so if we have depreciation I have reducing balance. So if we have machinery cost is 150,000. Now, if it was straight line method, we'll just calculate this 20% on this. But now they say reducing balance, it means we are going to less the amount of depreciation that was there before. So 150,000 minus 30,000, it will give us 120,000. So it is on this reduced balance that we'll calculate this 20% on. So say 120,000 times 20 over 100. That's 20%. Okay? So if we do that with our calculator, we have 20 divided by 100 times 120,000. So we have 24,000. 24,000. And this 24,000 is what will go to the profit or loss account as what? Expenses. As expenses. Okay? Now, when it comes to the balance sheet, because we already have a previous balance there for depreciation, now, what do we post to the balance sheet? We're going to post this 24,000 as the new and the current depreciation charge plus the previous, which is 30, to make it accumulated depreciation. So 24,000 plus 8,000 gives us what? 54,000. And this is what goes to the what? Balance sheet. Under the fixed assets, reduce the what? The machinery value. Okay? So this is the first thing you should do. We have done the adjustment. Now let's prepare the trading profit or loss account for the year ended 30th June 2007. Okay? So preparing this now, we're going to prepare the trading profit or loss account. So put this one side. Let's put it here so that when we need it. Okay? So the trading profit or loss account is the first account that will be prepared. Okay? So in this now, what do we do? Now, the first item that should come here is the opening stock. The opening stock. Okay? Now the opening stock, we'll check here. Our stock at the beginning, 18,200. So we have 18,200. Okay? So the next one is add purchases. The purchases and sales are together. So the purchases are the one at the debit side, that's 178. So I have 178,000. So if we add it now, we have, this is 200, this is 6, this is 9, this is 1, that's 196,200. Okay, now let's check if there's a return outward. Now we have returns here. Okay, we have returns here, but both of them are together. The returns together. So most of the questions they use in confusing students. But return inwards is the one at the debit. Return outward is the one at the credit side. So we have to say less return outwards. Let's return outward. Okay, that's 17. So 196,200 minus 17 will give us 194,500. Okay, so if there is carriage inward, there is no carriage inward. Now the next thing now, they said goods withdrawn. If you check here, say the proprietor had withdrawn goods worth 56. This has not reflected in the books, and we did adjustment on that. Okay, look at it. We did adjustment, goods withdrawn. So we say the first one will come to the trading account. Okay, which is this. So we are going to take it. We are posting this one now. So we'll now say less goods withdrawn 5,600. So this minus 5,600, 0. This is 9, and this will give us 881. Okay. So the next thing now is a closing stock. So the stock at this was valued. So stock, first one is being posted here. So we have stock. So just say less closing stock. The closing stock is 16,700. Okay, so if we do that, this is 0, this is 2, this is 2, this is 7, and this is 1. Okay, so at the credit side, we're supposed to have our sales. So here now, what will be the sales? The sales is 280,000. So we'll have here sales 280,000. Now we'll check if there's return inwards. There's return inwards 34. So we'll have less return inwards 2,400. So this minus this, so that it gives us our net sales. So say 280,000 minus 2,400 is 277,600. Okay, so now this becomes our cost of goods sold. Now to get our gross profit now, our net sales deduct cost of goods sold. So 277,600 minus 172,200 give us okay 2. Okay, this is supposed to be 6. It's 280,000 minus 24 as 2. Sorry, minus 34 is 34. Okay, 34. So this is supposed to be 276,600. 276,600 minus 172,200. So we have 104,400 as our gross profit carried down. Okay, so that's the gross profit. So when you add together, you're supposed to have 276,600, and also you have 276,600. Okay, so that is the trading account. Then the gross profit carried down will be brought down here as gross profit brought down 104,400. Okay, so our expenses will be outlined here. So we'll start checking here now. The expenses discount. So we have discount both the debit and credit. So the discount at debit is always the discount allowed. So right here, discount allowed 1,320 NG. Okay, now why the one at the credit is discount received. So I have discount received as income. Discount received 1,560. Okay, so the next one is carriage outward as expenses. So right here, carriage outward as expenses 4,250. So I have 4,250. Okay, so the next one we have rent and rates as expenses. So I have rent and rates 7,480. Rent and rate. Remember, rent and rate we did adjustment. Okay, so you see the essence of preparing this first. So we'll now check the adjustment. Rent and rate. Look at rent and rate. Look at the amount we said is coming to the profit and loss account. So tick it 6,080. So write it here 6,080. Okay, the next one, wages and salary 7,480, but we did adjustment. Wages and salary, this is the amount coming to the profit and loss account. Okay, 20,000. So tickets as wages and salaries, 20,000. Okay. So the next one, you have machinery. It's not an expenses. We have depreciation. So we'll check here. Depreciation. This is the amount coming to the profit or loss account, 24,000. So we'll check. We'll write it there. Depreciation, 24,000. Okay. The next one, provision for bad debt. We did adjustment. So we have recorded this. A provision for bad debt. This is the amount coming to the profit or loss account as income 1, 2. So we'll take it. So it will be recorded here. Okay. So we have provision for bad debt as 1, 2. Okay. So the next one is bad. The next one is bad debt. Bad debt is 1,060. So there is no adjustment for that. So just write it there. Bad debt, 1,060. Okay. So the next one, general office expenses. So write general office expenses as 3,890. Is there any other one? No. Now the next thing you got to check in your adjustment if there's any expenses that you have not recorded. Okay. Wages we've recorded, rent, provision, depreciation we've all recorded. Now let's now get our net profit or loss. Okay. So if we add up here, so if we add the income, 104,400 plus 1,560 plus 1,2, so we have 107,160. Okay. So let's add these expenses. 1,320 plus 4,250 plus 6,080 plus 20,000 plus 24,000 plus 1,060 plus 3,890. So 60,600. So it's lesser than this. So we deduct it from this. 10. So say minus 107,160. So this will give us 46,560 as the net profit. 46,560 as the net profit. So let's now prepare the balance sheet. This is what net profit. So this will give us 107,160. Okay. Now let's prepare the balance sheet. Okay. So let's prepare the balance sheet. So preparing the balance sheet now. So we're going to start with the capital. So we'll have the capital. Okay. So I have the capital. Look at the capital here, 120,000. Now the next thing is to add net profit. And the net profit we got from trading profit loss account, that's 46,560. 46,560. Okay. So if we add it up, it gives us 166,560. Okay. So the next thing is supposed to be less drawings. Less drawings. Now if you remember, they said the proprietor withdrawn goods. So that is, this goods withdrawn become the drawings. So this is the second time. Remember I said everything that appear under the additional information appear twice. So this goods withdrawn, the balance sheet. So 5,6. So I have 5,6 here. So this is 0, 6, and this is 9. This is 0. This is 6. This is 1. So 160. Okay. So now move to the right hand side. Here we'll have the fixed asset. Now the fixed asset, okay, so the fixed asset will have the cost, will have depreciation, and the net book value. So now what's the cost of this asset? Machinery. So I have machinery is 150,000. 150,000. Now what is depreciation? Now if you notice, we said we had the previous depreciation and we calculated one here. So look at the depreciation that is coming to the balance sheet, 54,000. So it is appearing 2 times again. So we have 54,000 here. Okay, so 150,000 minus 54,000. So it will give us 150,000 minus 54,000. It gives us 96,000. Okay, so 96,000. So any other? No. So come to current asset. Come to current asset. So check current asset. Now what are the current assets? The first one is our stock. Remember our stock? So it's coming to the balance sheet. This is the second time. So right, stock here, 16,700. Okay. So the next one will come down. Debtors. Debtors is how much? 32,000. 32,000. Now remember, we had provision for bad debt. This is a provision that is coming to the balance sheet. The new provision, 6,000. Okay, so we have less provision for bad debt with the 6,000. So 32,000 minus 6,000. So I have 32,000 minus 6,000 will give us 26,000. Okay, so we have 26,000 here. Okay, so and the next one we have, okay, debtors and creditors. Now let's prepare the current liability so that I can post it as soon as possible. So we have current liabilities. Now we have the creditor there, 24,600. So I have creditors, 24,600. Okay, now if you count down, we have cash. We have cash at bank. So if we have cash here, so we have cash at bank as 47,720. Okay, so we're gonna check. There is none, and let's check in the adjustment we did if there are items that is supposed to come there. Okay, wages. Current is going to current liability. Okay, so we're going to post it here. So said accrued wages as 2,260. So if we add up 24,600 plus 2,260, that's 26,860. 26,860. Okay, now check again. This one have not appeared. Okay, rent coming to the current asset. So hide prepaid rent of how much? 1,400. Okay, 1,400. So we have, okay, so that's all. So the next thing you have to do, you have to check from up down. If there is an item that is supposed to come in that you've not recorded, capital we have recorded, debtors and creditors we've recorded, rent and rate, wages and salary because of their accrued and prepaid we've recorded, machinery we have recorded, provision for depreciation we've recorded, provision for bad debt, the adjustment we've recorded, cash at bank we have recorded. Okay, so let's now add up. So if we add up now, we'll now have 160,960 plus 26,860 is equal to 187,820. Okay, so if we first of all add this 16,600 plus 26,000 plus 47,720 plus 1,400. So this will give us 91,820. Okay, so 91,820 plus 96,000. So the total is now giving us 187,820. So making both of them to balance by itself. So it means that this question we have solved thus far, this is the solution. Okay, started from this is the adjustment, this is the trading profit and loss account, and this is the balance sheet. Okay, thank you very much for watching. Ensure you like, comment, share, and subscribe our videos. Ensure you follow us on Facebook, on Instagram, on TikTok, and on YouTube. Thank you very much.